Good morning, everyone. It is Monday, December 6th here in Trading Rebels, and this is a look at our watch list for today. It's a little shorter, or a little smaller. After a very rough, bumpy ride last week, we are pushing back away from the 50. That 50 here, these are the futures, and I blew this up a little bit so you could see it a little better, but we are using that 50 very nicely here. If we pull out and look at it a little bit longer, we can see that the 50 has been some pretty decent support, even if we have floundered there for a while. And of course here we put this inverted head and shoulders right up underneath there. So now we're going to watch and see how are we going to continue to react here with the 50 in the days forward. What does that mean for our trading? I would definitely lean toward a lighter trade week. Until we see follow through one way or the other. Follow through doesn't have to just be to the upside. They can certainly be to the downside, and see if we are now beginning a new trend. Just a very rough couple of weeks actually here that we have gone through. The new variant that really started the slide for us there at Thanksgiving, the Omicron variant really hitting the market and knee-jerk reacting before knowing that much about it. And so now I think that it's kind of settled in. We're getting the data. It'll be another probably week until we get real solid data on that to tell us where we are going. And we had some travel bans go into place, and now they're reconsidering that. So there's just kind of a lot geopolitically going on around that variant. So just keep all of that in mind as you are trading. All right, but let's come back here and take a look. I am in PFE, and I added back a half position to this last week. Love the little wedge pattern it's in, but they are they have a COVID pill that they are going to look for approval from the FDA. So as we get that going along, this is just a play on that. So I want to make that really clear. It'll probably be a sell the news event. So as soon as that news comes out, we want to, step aside and let it set back up if it decides to continue on. Overall, nice little wedge pattern in there. But that is why I am in PFE, and you need to be aware of that going into a trade like that. It is a little bit, it's just a smidge higher, I think, than what it, well, let me see. I had some pretty decent profits going into today, and it is sitting right about 53.84, so just above the 3 EMA there on the chart. So, okay, so that is PFE, but let's hop into a few that I'm watching for today. Went to Dollar General yesterday. I actually did go to Dollar General yesterday. Look at this, really, they had their earnings missed, pushed down, and now look, they started a very nice recovery on Friday, and we're going to look for a continuation of that. I like this above the 50 and a hold of the 50 in Dollar General. I like the 220s and 230s out there in January, so January of next year. A push, anything above Friday's close, but then really needs to get up above and stay above that 20. The 20 could easily be the entry there, and I like both the 220s and the 230s. The 230s didn't have quite as much volume as I would like to see, but that will probably come in today, so that's why I put both of those down. I didn't go to Dollar Tree, but kind of similar look. Now we have a nice little wedge. We had the gap down post earnings. We moved up on earnings and then gap back down here, and now like this nice another little wedge here, forming some nice bullish inside candle price action from Friday. So really like the setup on here, and I like the January 130s, anything over the close of Friday, and then work on this gap, right? So remember, there's a gap here. Gap can be resistance at the bottom and at the top, so we'll keep an eye on that, but I like the look in DLTR. Procter & Gamble, looking for a continued breakout just on a day trade here, but look at the volume we started to build back in on each of these candles. We had some pretty tall wicks on these, so not as decisive, but here coming into Friday, we came in, we have a 3-8-20 cross. We're up on the top side, so looking for a break of that high of 150, and in PG, I would actually hang out there in the 150s. We did talk about Dell on Friday, just kind of out of nowhere. Thursday, big bullish engulfing candle, and then that continuation on Friday. This was the line that we were looking at it to cross to get to potentially take a play. And well, Friday was just a busy day for me. And look at this, right? So we're building some more volume. So looking for a continued breakout. We've been in this kind of box here, or channel, for quite a while. So it's nice to see this breakout. It is continuing on this morning, so I'd look at it more as a day trade off of an opening range break, and I would look at the Dell 60s. And new, we were looking at this one on Friday as well. Let me get this old line out of here. There we go. We were looking at this one as well on Friday. And I'm going to draw another line. Got all kinds of lines in this one, huh? All right. Like this push away from the 50. That came up on the scan. And then we used the 3 and pushed up, touched the 20. I like this. Anything over the 20 to come up and touch one of these two lines here, either the descending trend line or the previous resistance line that we have up here. I like both of those in new, and that would be the 110s there in January that I do like. Now the rest of the sector not really performing, so keep that in mind. This is definitely one that is swimming against the current there. We built up just a smidge of volume on Friday as well. All right, and we would be very remiss if we did not talk about Apple. What a crazy ride over the past couple of weeks, right? We came up and wow, just huge, punched up, came back, tagged up, punched up, came back, and look at this. This is actually a pretty bullish candle. Now I know it's red, but it's an all open candle. Came back, gave about half of that back here on Friday, but a pretty decent little tail. Would I wanted to hold on to this here? Probably not. I have a very long position that I don't trade. It's an investment. But if you are trading this, I would now look for this for a push off the 8 or a cross above 164 here for a test to come back up here to the 170s. A lot of this is very news driven. Do they have enough chips? Do they don't have enough chips? Are they cutting back suppliers? Are they warning suppliers? Is their demand high enough? Is it, oh my gosh, it is a battle. It's like Rock'em Sock'em Robots there when talking about Apple, so be aware of that as well. But overall, Apple, a pretty decent investment. And as a trader, I like it over the 154. Let's put it that way. There we go. That's what the 164 area here for a test of that 170. And I think iPhone, Apple sales across the board will probably do just fine across the holidays. Reason they're having a chip shortage just isn't because there is a lack of chips. It's because they have very high demand. So, okay, that is it for me here this morning. If you have any questions, please reach out, Heather C. at GivingTreeTrading.com. I will be around all day.